All right, everybody, welcome to CyberBulls. This is episode 69. The big topic of today is who are the institutional fund managers who are investing in Tesla? Who are the Tesla bulls? How much are they investing? And why are they investing? We're going to have the bulls explain that to us, especially Alexandra Mertz. She's going to do the full report on that. We've got Jeff Lutz and we've got Xander Sky as well. Welcome, everybody.
Hello.
Nice to be here.
Okay, so Alexandra, let's get started with you. Why don't you share with us your research on what's going on with the institutional fund managers?
With pleasure. Actually, what happened this week, I don't know what mood I was in. I did a little poll. You may want to be able to share that one on who do people think is their preferred fund manager with a big Tesla exposure. And that came out obviously overwhelmingly for Ron Barron. I put their Twitter names there, so it was Ron Barron analyst with 70%, followed by Kathy Wood with 16, Gary Black with 10, and Real Meet Kevin with 4. And as you see, I don't know who voted for Real Meet Kevin. Was that me? Was that you? Whoever it was. I actually think that Real Meet Kevin is undervalued here. And I put in brackets their current exposure in their flagship funds. I mean, for some of them, there's only one fund, but and then we discussed this a little bit, Herbert, and you said how about we update everybody where these people stand, who they are, how much they have under management, and how they really act, because they're all considered, all 4 of them are considered Tesla bull, or they consider themselves Tesla bulls. And so I think we should shine some light on the history and explain the differences of those 4. And so that was my preparation for today. So the first one,
just a quick question here, just to clarify. First of all, you had 5,000 votes on this poll.
Which
That's
is a lot,
significant
right?
number.
Mhm.
That's enough. And then what you put here in the brackets, that is how much that in their fund they have Tesla's fund percentage, right? 36%.
In their flagship
versus,
fund, yeah. You will see Ron Barron has, I think, 19 funds. The ARK funds have now 13. So I always took the biggest one. Real Meet Kevin has only one ETF, so that's the one and only. He has 25%, and Gary Black has 2 funds, the Future Fund and the Long Short Fund. So I took the bigger of the 2, the Future Fund, the older one, and there he had at that day 6.97%.
Great.
Yeah. So this one, can you zoom this in, because otherwise it's going to be complicated to read. So and I will publish that on the Twitter page as well once we have it. You have the columns for the 4. So Barron Capital, ARK Invest, Future Fund, and Real Meet Kevin Puffrad. So they were all incorporated at different times. I put them in order from left to right, from oldest to youngest. Barron Capital, run by Ron Barron and now his son Michael, that got incorporated in 1983. ARK Invest in 2014, so they're going to have 10 years next year. The Future Fund 2 years ago in August 2021. Real Meet Kevin last year, end of 22, so it's a year-old fund now. The assets under management for the whole firm are completely different as well. And I would like you to read those 2 lines together. The highest asset under management they had were actually very close between Barron Capital and ARK Invest, 57 billion and 50 billion. But currently it has melted down, obviously, after that bear market that we've known the last 24 months. So the total assets under management for the Barron funds are down to 40 billion, from 57 to 40. While ARK Invest has melted from 50 billion to 13 billion. Okay, there you see the risk profile of ARK Invest a lot. The Future Fund is currently at its highest, because the 2 funds together make about 10.5 million, obviously tiny compared to the other ones. And Real Meet Kevin had the highest asset under management a couple of months ago at 44 million, and it's currently down to 37.5. That is also because the Tesla stock is down compared to when he had some of it. And that obviously with a 25% allocation has an impact. So Barron Capital, as I said, is having 19 funds, ARK Invest 13. They just did some Bitcoin stuff as well. The Future Fund has 2, and Real Meet Kevin only has 1. The flagship funds are called Barron Partners Fund for Barron Capital, and that actually exists in 2 versions. BPT-IX and BPT-RX. So what's the difference between IX and RX? It's institutional or retail investors. What's the difference of that? Institutional investors have a tranche, a part of that fund that only has a cost factor of 1.44%, while retail investor, RX, pay 1.69, so 0.25% more. So there are two tranches in that fund, and as a retail investor, you pay more of it. And obviously, this is a mutual fund, the Baron Partners Fund, so it's not tradable like an ETF. You have one daily net asset value at which you purchase or you sell. So there's much less transparency. They only publish once every quarter their end of quarter portfolio, but they also don't move that much. So it's not as if, honestly, the fact that it is a mutual fund and that it is higher in cost wouldn't stop me if I would be convinced that those are the right managers, but it is considerably more expensive. It's nearly double as expensive as the typical ETF. So, and it doesn't have these 90 days of reporting that the ETFs have every day. So the ARK Invest ARK K is 0.75 cost factor. Gary's future fund is 1.01%. Real Meat Cabins is 0.77. So these specific funds, the Baron Fund is 6.5 billion, was already quite higher, was around 10 at one point. ARK Invest 8.25, that was above 30, so that is melted down a lot. The future fund is 8 million, so they were tiny. And Real Meat Cabin actually in only a year is at 37.5, which I think is a considerable size for a fund that was just put up a year ago. The other aspect where they differ is how many different holdings do they have in there. And Kevin has only 15. He has the least, and he's the most concentrated in tech. So he has 15 different stocks in there, out of which Tesla is the number one position with 25%. And then comes Enphase with 13, and then comes NVIDIA and all that, Intel, whatever. The second least diversified, if you want to call it like that, is the Barron's Fund with 24, Baron Partner Fund. Their Tesla is number one position with 36%. That was at one moment close to 50%. So what happened there? Initially, when in 1992, they set up that fund, it was a mutual fund which had the typical diversification guidelines, meaning the sum, no holding could be above 10%, and the sum of the holdings between 5 and 10% could not exceed 40%. So that was, the good old diversification rules. And then when Tesla started rising, they invested in Tesla in 2014, if I recall it right. 2016, when Tesla started rising, Baron wrote to all the institutional and retail investors in the fund and said, we want to do a holder vote. Would you agree that we let our winners run? And they agreed. They voted and they agreed. So that's how Tesla went up. So was excluded of that 40%, was excluded of the 10% rule, was excluded of the 40% rule. And that's how it was able to rise to these levels. And I think that was obviously the intelligent thing to do. So currently it's down at 36%. They held about 5 million shares at one point, and then they started trimming at one point just because they felt they had to take some gains at a higher price than it is now. So they were right. They're currently holding 4.1 million shares. And their second biggest position is SpaceX with 10%. It is the only mutual fund that has SpaceX in this proportion. ARK now has SpaceX in a much lesser proportion in one of their venture capitalist funds, but much more complicated, a sort of a closed-end fund, not at all comparable in the legal structure and in the liquidity it provides. Another point that the Baron Partners Fund has that the others don't, it takes leverage, meaning at the moment they have about 14.6% that they're above their cash position. So they don't only have stock, but they do play with margin, or they do play with options to have more leverage to the market. They do believe the market is currently going up, so that is their position. But do remember, we only know a snapshot on September 30th, and the next time we will know something is on December 31st. So it's not as transparent as we would have it with ETFs. None of the ETFs here use any other leverage. And then to get to the other funds, so ARK-K now has Tesla in its number 4 position with 7.5%. Their number 1 position is Coin with 11.6%, followed by Roku, followed by Zoom, Square, CRISPR, all these things that we've talked about a long time ago. And they held at the highest. They entered into Tesla in 2016. They held at the highest 11.5 million Tesla shares in that fund, and they're now down to 2.6 million. So you see the difference between Barron, who went down from 5 million to 4.1, had this intelligence to let it run above the 10%, while the others, with their constant trimming and the fact that the Tesla had to carry all the other stocks that were even underperforming, is now down to about a quarter, not even 20% of where they were. And then we will get to the returns in a second because I have charts for those. So the future fund of Gary, he has Tesla now at the second position, 7%. The highest position is Google, close to 10%. And then the second is Tesla, then Quanta, Eli Lilly, Micron, Chart, Celsius, all those things. Uber, he tells us about, Airbnb. He had as his highest position nearly 6,000 stock and is down to 2.5. So here again, a growing fund, but less Tesla. So obviously much less invested than when he had 6,000 shares, and then a lower fund volume. And then to get to Kevin, his PP fund. So he has Tesla number one position, 25.5%. He's only allowed to have 25%, but he can let it run a little bit above that without the SEC tapping on his fingers. I mean, he won't be able to get to 28 or 29% because he's really maxing it out already. But I want to really, he has a high conviction in Tesla. Since he has the fund, he has always been at the upper limit and has not considered any other EV maker, because the rule is not that you can have one issuer with 25%, but you can have one sector at maximum 25%. So what he's doing is he's using the whole EV car sector just for Tesla. He's not considering any other EV or car stock so that he can max it out on Tesla, and then goes with a portfolio where he has Enphase, NVIDIA, Intel, ASML, AMD, Taiwan Semi, Apple, Ubiquiti. So he is at his most he ever had with 40,000 shares. Like I said, it's just a 1-year-old fund. And so the last chapter of my little rundown of those four is performance. So obviously, over a long term, it's only fair to compare the Barron Partners Fund with ARK-K. So you may want to pull up that chart if you don't mind, Herbert. So that's Ron and his son, Michael. Exactly. So this in blue is the Barron's Fund, and in yellow, ARK-K. And obviously, you see exactly what happened when they didn't cap Tesla compared to ARK-K. So you have over the when was it put up in 19? When was it? When he put it up, 1992. So it's about 30 years now. Let me just check it. He put it up in 1992 exactly. So 31 years. He made 11 times, while ARK in the 10 years made 135. So just 1.3 times what the investor put in there. So that is the two that we can compare over a longer period. And then I did a chart of all four over the last 5 years. So obviously there we have the same issue that Future Fund and Meet Kevin are too young, but you see over the last 5 years, Barron Partners Fund largely outperformed everybody. So they were not only good at letting Tesla run, but they were also good in the period when the market went down, 2022 to now, to stabilize performance, right? While the others really fell down, they were able to stay at a reasonable level. And so they have a 200% 2x performance over those 5-year period, while everybody else is just miserable. And then if you look this year only, that's the last chart year to date, they're very much closer. And that's where ARK-K has been shining the last month. The last month, the small growth fund, stock has outperformed. You have the Rokus of this world, and obviously you have Bitcoin of this world that outperformed. And that's where you see ARK-K in yellow here, getting above everybody else. For all the others, it was quite a, similar year for the rest of the year, but ARK has really shined the last 3-4 weeks, and that's visible here. Okay. Any questions? Xander, no, maybe yes, maybe no.
I'm thinking. So Is there a reason ARK rotates out when the stock starts to climb, when you would think that they would, because it seemed like over the last year they would cut the stock that would start climbing.
Yeah, and
Is there any?
I'm actually watching whether they will do the same with coin now, because coin is now coming to the 12-13%. So let's see whether they did it only for Tesla, where Tesla's outperformance was very good in nourishing all the underperformers. I don't know exactly where it comes from. My gut feeling is that institutional investors, which are now heavily invested in the ARK funds and which helped her survive this, very difficult period, that institutional investors have very clear old diversification standards. They use the ARK funds on the margin. They want their usual portfolio separated between cash, bonds, and standard index funds, and then they put like a little bit of salt and pepper, some ARK funds in there as well in small quantities. But what they don't want is a highly concentrated fund in one stock. And so I think that's why this 10% rule still works in their environment. I'm quite certain that it's more institutional investor driven than the sense it makes, because it doesn't make sense. So that's the company you're in, and in the Barron Partners Fund as well. I mean, Barron is more clear about it because he has the 2 tranches, so that institutionals are there with you, and they just have so much more money and so much more influence than a small retail investor in those funds.
Alexandra, these 4 fund managers or ETF portfolio managers, okay, they're all Tesla bulls, right? So you got Ron Barron, you got Kathy Wood. They're on TV a lot. They're very, very bullish about Tesla. Not Gary Black, when he's on TV, he's pretty bullish about Tesla, but on X, he often will criticize or give separate kind of different opinions about what Elon should do or Tesla should do. And then you got Kevin, who is on TV and been very, very negative about Elon, and he can kind of like be very bullish, be negative. What do you think about their behavior as they promote Tesla? But they're all, invested in Tesla.
Exactly. I actually think it's very complicated to manage other people's money, have to obey to the rules of a financial advisor and of somebody under SEC surveillance, and be a big mouth on social media. I think there is a real issue of conflict of interest. And I think the one that masters it the best is actually Ron Barron. Ron Barron is bullish. His fund is positioned to it. He's very clear about it. He only goes on CNBC and to his investor meetings where he is filmed. He's well prepared. He knows what he wants to do and what he wants to say, and he doesn't go a iota over it. And anything else, and we know that actually from this depositions in some of the court cases, anything else happens behind the curtains. We know that Ron Barron sends emails to Elon, say, do this and that, eat an ice cream and walk around the block rather than getting annoyed on X, whatever. So we know there is contact, but he would not use his fame and his X account to do this publicly and make a fuss about it. And I think I really appreciate that. I think that's the wisdom I would like from a fund manager. Kathy Wood is a little bit difficult for me because she sounds much more bullish than the action that is then taken in her funds, right? So with ARK, the beef I have with ARK, and I want to be very clear about it, it's easy for me because I'm not managing anybody else's money, is I think she rides this Tesla theme much too much. Most of the research they have out there is always Tesla driven because she knows that brings interest to her firm. But then the action, meaning the investment into Tesla, is much more political, is much more seasonal, is much more, there's much more to it. So I have the feeling she misuses her Tesla analyst queen position for other means, which I'm a bit doubtful about. Gary is an interesting case. For Gary, it's the first time he's actually managing his fund. And I think for him, it is a little bit the position between the wise Wall Street insider. I mean, he would hate me for saying that, but it doesn't matter. Telling us kids how Wall Street thinks and does things, and oh my gosh, I have this fund to manage and I want you all to invest here and whatever. So he's sliding a little bit between those two. And it's actually funny to see how sometimes he realizes that he's been too negative, and then he does a 90-degree turn and gets unbelievably positive. So Gary is for me, I actually, and I told him that a couple of months ago, I think he should have a firm where people have trading accounts and do a completely different business model than running an ETF. I think what he brings to the table is much more interesting for people who want to do their own trading, but want to have somebody there that has this experience and shares it with a privileged group of clients than an ETF. He didn't agree with me, but that's just my feeling. Now, Real Meat Kevin is the biggest differential between what he says and what he does. He has been the most consistent bull. I mean, who else sets up a fund, puts 25% into Tesla and goes in and stays there? So that is remarkable. None of the others, I mean, Ron Barron did it, but he built it up over time. He did it in a much more conservative manner. He consulted with his clients. So what Kevin did is much more bold, but he's such an attention whore, sorry to say so, that any subject that can be put on a YouTube video or on the next thing and that brings clicks and monies is good enough, whether it corresponds to his position or not. So it's just, it feels like it's bigger than him. He has to make drama around it, and he can't be measured. So he has too little experience as a fund manager to understand that as a fund manager, there's a moment you should just shut up now and, support your investment decision or not talk. But no, for him, his persona, his YouTube persona, his Real Meat Kevin, and I mean, he copied Xander's studio, right? Xander set up this studio, and then Real Meat Kevin said, "Oh, I want the same."
Other way around.
No, I know. So I just think he has his 10 minutes in the morning. I look after my fund, and then the rest of the time he is his Real Meat Kevin again. And I hope for him that doesn't backfire, because the SEC doesn't find that as funny as he does and we do. And it is just absolutely in contrast to what he really does, because he is a super consistent Tesla bull. He is, and people don't understand it. If you don't look at the fund on a daily basis, you will never hear it from him.
So funny enough, I ran into Mikey, who has a podcast with Meat Kevin. I think it's a Real Meat Kevin podcast or something like that. So they discuss Elon and Tesla a lot on there. Worth checking out, and great. Mikey was awesome. Great insight. Trying to understand, because I've been tracking Meet Kevin since the early days, since 2019 for me, with real estate, even prior to that, so like 2017, and yeah, he's doing so much, and he's taking all these tests, and he like the drive on this guy is just incredible. And it just comes down to, do you want to trust your money with somebody like their thing that they're doing with House Hack? I actually considered it, and I don't want to diversify away from Tesla, so I just stick with my 100% position in Tesla.
Yeah, and the success is his. I mean, I have to admit, this guy is an entrepreneur how we have seen very few. I mean, I followed him as well. He lives in Ventura, just down the coast from me. Father of 4 young kids. He's actually German. His life story is I mean, everything is a book. Everything is drama, but beautiful, right? You get attached to the guy, and you may not like his big mouth, or you may appreciate it. That's not the point, but you have to give it to him that he is extremely entrepreneurial and makes something out of nothing. I mean, the guy was poor at 20, and look where he's today, and he's still very young and long to go. It's just this discrepancy between his positions on Elon and everything, because he treats Elon like he treats any news subject, right? Last night he did the GOP debate, and tomorrow he's going to do something else. And then if the middle something happens with Elon, he'll do something on Elon, and it will have no influence on his investment portfolio. But you can't do that as a fund manager. I think that's what he didn't understand yet, that as a fund manager, you have a fiduciary responsibility for your investors, and you can't just talk blab or whatever you think is the last thing and it concerns your major investment. You have to say something that is coherent with your investment, and there's just, it's two different worlds for him.
Yeah.
All right.
Before we lose Jeff, I'll say this about me, Kevin. During the pandemic, when I was working my location for 5 weeks straight, I had to fill out PPP documents and EIDL stuff, and I was literally open to close by myself, and driving it home, and so during the day I would watch Meet Kevin videos, and he helped me save my businesses. So for that, I know he got paid through all the YouTube advertising and all that, but that impact is where he really earned my respect. He obviously
all
did
while running for California governor. it was just crazy, and he does a lot of things. I mean, I love entrepreneurs, and he is just as entrepreneurial as it gets.
The real deal. Meet Kevin.
Yeah. Alexandra, when are we going to see more institutional fund managers appear on your list? Right now you've got 4. Could there not be any more over time, right?
Well, the problem is there are bigger amounts, but all those are just index trackers, right? I watch them all the time, making sure, they're the Vanguards and the Fidelities and all that, but they have at most exactly the weight of the index, and often even below it, right? So there's no point talking about it. I don't want to give them any credit for it. So when these people switch, when these people turn, you'll be the first one to know, believe me, because I'll be really happy. And that's why discussions I have on X from time to time, when people go, oh, Vanguard increased. No, Vanguard didn't increase. The fund grew, and they had to proportionally buy more, but they're still at the same percentage of Tesla in there. So at the moment, there is nothing more, and it's a shame. And institutionals are still very, very reluctant with this fund. Now, it may come from two sides. First, it may come by the reduced interest rates that we all anticipate, which we're getting into that subject in a moment. There's still so much money waiting to get into the market. And second, it may come when news from Tesla just becomes so much stronger as an argument that they can't ignore it anymore.
Sorry, before we move on of this topic, I'd like to ask you if you can speak to Ross Gerber. I know that there's been some exchanges about that recently. He's a big celebrity in our Tesla retail community. So people want to know, what exactly is his holding, and what's his position?
So Ross's fund opened about 3 months before Gary's. It is called GK, Gerber Kawasaki. He Meet Kevin, he actually does what is called advisor shares, meaning the fund business is run by another company, actually the same company for both of them, called Advisor Shares, and they are the main advisor to the fund. So they're not really a fund management firm; they're just the brain behind it and the whole thing. So that's the same for GK. It had a miserable year. I think Ross had a very difficult year with his own investments and on probably many other things, because by far the worst performing stock of the ones we usually look at. And he has been, I don't know how to say it politely, but he has been flip-flopping in his attitudes towards Elon, against Elon. I mean, we all remember his run for the board. We've discussed that on the CyberBulls a couple of times, how he then retired from that, thought he would be considered for an interview with Elon at the Investor Day in March. That didn't happen. Then he was pissed. I mean, it was just drama all the time. And so him and me got at it. He blocked me now, so I don't know. So this morning he put out a tweet saying, "Oh, just so everybody knows, my firm has 100 million in Tesla, and look at the SEC filing." And then I had to correct him. His firm doesn't have 100 million in Tesla. His firm has 5,000 shares. So that is just about $1 million. in Tesla via the GK ETF, for which they have voting power, and everything else, the 98 million, are actually clients that have managed accounts with Gerber Kawasaki, because that's what they are. They're a wealth management firm for other people, where people put their portfolios, and then you have quite a lot of actually very good wealth managers. I met a couple of his crew members, his team members. They're good people, and so they manage accounts of people. But they ask the client, well, do you want more or less Tesla? Do you want more or less Rivian, and whatever? So this is nothing of Ross Gerber's money. This is just the way this is structured. And he has a lot of this LA, Hollywood, Santa Barbara crowd. That's his clientele. And then that's obviously where the money is. And that's where these 98 million of other Tesla shares come from, for which he doesn't have any voting rights or anything. He's just holding them and managing them for his clients. So that was the latest in that drama. So he has ordered a Rivian for his wife. He's waiting for his Rivian. He's waiting for his Cybertruck. And tomorrow will be a new chapter in the drama life of Ross Gerber.
Alexandra, I have a quick question for you.
Sure.
Are there any more financial catalysts coming to Tesla in terms of like upgrades, either from S&P, Moody's? When do those fund managers or retirement funds, when do those people get in, and what do we look for?
Well, I don't know whether you've seen lately these political tweets and posts by people who discovered that since Elon purchased Twitter, the establishment has decided to be against Elon, against X, against Tesla. So that also incorporates, obviously, journalists, and that incorporates as well rating agencies. The rating upgrades are overdue. As I say in every quarterly update that I do of my table, Tesla is worth at least a AA, yet they're still BBB. So it's just completely nonsense, but that's the way it is. How do I know they're at least AA? Is when they were going for a credit line. Remember, they did a 5 billion credit line this year. They got AAA conditions, right? No bank would give them AAA conditions if the bank would think they were BBB. That's just it. So they're getting the market conditions of a AAA issuer, yet that's it. So there is another thing that's pending. I don't know when that is going to come. Remember, at the end of the last quarter, we saw 2 billion utilization of that credit line, because they're trying to do at least a 1.8 billion asset-backed security. What does that mean? Tesla leases cars to me. I am a 820 credit risk. So what they do is they bundle all these leases and do what's called an asset-backed security, which is then sliced in different tranches, and the AAAs go there and AAs go there. You probably all get thinking of 2008, and it is a little bit the same thing that happened with the mortgage-backed security. So anyway, so that's what they wanted to do. Why do they want to do that? Because it would take 1.8 billion of those leases off the balance sheet of Tesla to then get it back to the market and give them room for new leases without being on the balance sheet. So the way this is supposed to be structured would have been for now, and by the spread of the different tranches, by the interest rate at which this would be launched, you could see how much the market appreciates the credit risk of Tesla. And I'm sure it would be AAA again. That's why I'm so after this publication, so that we learn it. But at the moment, we don't know more about it. I hope it still comes in December. So that will be another confirmation. But will the rating agencies upgrade? Well, they're overdue. They should have done it 2 months ago already, latest. That was the yearly anniversary of those. Moody's anniversary, that was S&P. Moody's anniversary is in March. Maybe that's coming in March. I just think at the moment we're in such a period. We launched the best truck in the world, and the stock did nothing. They were going on and hammering that 60,000 is a lot of money. You got to be kidding me. This is the best truck in the world, and $60,000 is a lot of money. I mean, how crazy is that? There are 2 million people waiting. You call me today and say, can you please put 60,000, 100,000 down? You get the truck tomorrow. Believe me, I walk to the bank and bring them the money in cash. So, I mean, everything that happens has no effect. So we'll just have to sit it out until they get it. They may get it once we announce the $25,000 car, or once we announce that production lines are ready for it, or once we announce that Mexico is ready to now have permits. I don't know what it will be, but the longer they don't announce it, the cheaper we can still buy shares.
Well, there's a reason for that. The CEO has put a lid on the stock for indefinitely until he comes out and says the coast is clear. Right now, he's in the last 3 earnings calls. He's warned basically that conditions aren't good for people selling high interest rate items, which it has been true. It's going to be interesting to see, though, since October, that the 7 to 10 year have come down basically nearly 100 basis points. So it'd be nice if he doesn't have to wait for an earnings call to say, he tends to comment in posts on X pretty regularly and frequently. It'd be great if he could say something, if there's something meaningful to say. But the reason the stock isn't moving is there's a lid on it, and there's a lid on it until he says by the way, he put a lid on Cybertruck too. He said, look, this thing isn't going to be it could be the greatest product ever, but if they're not going to be built and sold at a high rate, he's put a lid on that too. So between now and maybe we're going to get a nice surprise at the delivery announcement. Sorry, the P&D, the production deliveries, a couple days after the new year. That would be. This was a big quarter, much bigger than 480K. Well, that would certainly crack the lid on the stock, and people would start getting in because now you'd have the numbers doing the talking. But in absence of that, you would need Elon saying, hey, look, everything is improved. And we also have a Fed meeting next week. So maybe between all these different events, the production delivery, and then eventually earnings call the week 3 of January, at some point, Elon's got to give the all clear and say, look, people are, we have the $7,500 off invoice. We upped our capacity from 1.8 to basically 2.4, probably higher. And that's not stuck in, that they could take that higher. They've done all these actions, but, he continues to warn about macro environments. So, and I think until he changes there, the stock will be range bound.
What do you think about in the interview that he just did with Sandy Monroe? 2 times he said, I cannot answer that because this would be, it would move the stock, or he's bound.
I loved it. I loved it because he's usually never doing that. And I was like, what? He's watching his mouth?
So there's a reason why, though, right? Because we've never heard him say that. He might have said it one time before, many years ago. It sounds like something to me. I look at it very optimistically. He said something goods might be coming, and he's just trying to be careful not to,
Well, to be fair, I mean, Sandy asked a very direct type of question, which would require like a number, and he can't do that. So.
Yeah, can't give you a number.
Yeah, he can't give you any indications, and I think he. The last thing he wanted to give were dates. So, saying, I don't know, the launch event will be then, and then 6 months later we'll have there was no way. And I think he's getting older and smarter.
Yeah.
Exactly. So and he's right. I mean, when I hear people complain that the Cybertruck took 4 years, I mean, come on, 2 years of pandemic, chip shortages, other priorities, moving to Austin, building Giga Austin. I mean, there was so much that happened in the meantime. What the heck? I just don't understand people.
And it delivered a superior product than we had any idea of, the internals. But
yeah, what do you guys think about? So when he was asked the question, right, and Sandy Monroe said, "When is the Gen 2? How's that going?" The Gen 3, the Model 2 car, and he said it's going to first being, production line. I'm working on it. The plans, it's going to come out first in Giga Texas and then Giga Mexico, and then a few days later, just yesterday, local media from Shanghai reported that Giga Shanghai is going to expand, and that expansion is focused on the $25,000 car. So what happened? Like, did he not know? Because if Giga Shanghai is
and you
forward,
forgot two things.
Yeah.
And he announced 10 days ago in Berlin, when he was in Berlin, that Berlin is going to produce it as well. And today he liked a post from Eva Fox, who said Shanghai is actually for the new generation car, and he liked that. So yes, I mean, will it be Shanghai first, Berlin first, or Mexico first,
Mexico.
all three are building. And I mean,
But you
do you think?
can't build Mexico in like these three will happen way faster than Mexico.
Well,
That's
that's
my
the
point.
question. That's the
How can it be
question.
number
Which
2?
one will be up? I mean, I believe it's Shanghai. Remember how quick the last one was? 11 months. I mean, this was crazy. Nobody in Berlin can do a factory in 11 months. That's just
How
impossible.
can you say?
And in Mexico, well, I
How
don't know
can you
why he
say
said
Shanghai when he said it's going to be Mexico?
because I'm right and
Yeah,
he's
but
wrong.
but also, hold on. Sandy Monroe asked about Mexico as a follow-up, and then he said like, "Oh, that'll be second." So that could have been a throwaway, not
Yeah.
necessarily.
It sounded
that's
very
I think
clear.
they're going to try to get those launches to be as close together as possible and bring up Berlin, Shanghai. They'll build this car everywhere because remember, its COGS base is so low that if they had to build that in one factory and ship it intercontinentally, the percent of the unit economics that would be in car distribution would be outsized relative to what they could afford. So they really have to build that geographically located where they're going to sell it.
Oh, but I think I just heard something you just said, right? Which I think I misread what you're saying. I think I'm right though. What you're saying is because it's such a low price car, they need to build this at scale as fast as possible. And so this one is going to be much higher volumes earlier than other cars.
Oh, for
Did I
sure.
misread you?
Well, I
Yeah,
didn't say
that's
that,
what
but I
you-
mean that's true. It
No.
should scale faster. What I said is they have
Yeah,
to
yeah.
build it where they're going to sell it.
Yeah.
They can't be
Do it
building
everywhere.
this thing in Fremont and shipping it over to Denmark. I mean,
Oh, no,
they,
no, no.
they can't
And
afford
it
it
won't.
from a logistics perspective. It won't. The math won't work.
I do believe they will stamp some of the cars out of Austin, but Austin will be the lowest production of all the four. I think the huge production output will be Mexico and covering the Americas, Berlin covering Europe, and China covering Asia. Only question is who covers India? That's actually the real question.
It would be Berlin until India's up.
But you know that India is driving on the other side of the road, right? So because people were telling me as well, the Ys are going to be built in Berlin with the steering wheel on the right. Is it then on the right? I mean, 57, I still don't get my lefts and rights right. But anyway, on the other side. So that's a completely different production line, right? I mean, I'm sure you can adapt, but
No.
Alexandra, with throttle by with steering by wire, it doesn't matter now. Now they could just
Doesn't
plug
matter.
in whichever one.
you think so?
Yeah,
Jeff.
it'll be more
Okay,
plug
so
and
there we get to
even
the
now,
subject. No. Go ahead.
Now it's not a whole different production line either. It's more of how the material is kitted and there's an assembly method change. But yeah, when they go to steer by wire, it will even be more modular. And this will be the unbox process. It won't be a bit. I mean, I think it'll be
Complicated.
Berlin. I don't think they're going to take cars in India out of Shanghai. I just don't see that happening.
No, because of the duties, of course. Now, I want to ask Xander something while I have his attention. So Xander was with us in Giga Austin when we were there for the three of us when we were there for the event last week, but he didn't mingle with us adults, right? He was there with the employees, he was there with the fancy guests and all that. So tell us a little bit about it, Xander.
Well, that was my favorite part was meeting all the people that I talked to on the internet, and then having access to people like Martin Viecha, and getting him to autograph my wristband was super cool. And then like it was my birthday and someone gave me a cyber spoon, so it was a special time. I talk to you guys all the time, but I don't get to talk to the other people. I kind of wish I would have. I went out of like the VIP area for the after party and try to talk to some people. But I wish I would have just almost stayed out there more. And it's really bizarre getting recognized now. I'm not used to that at all. So, yeah, it was just an amazing time. People were in town, and now that I'm in Austin, I could just drive out and hang out at the mansion. And it was like I got 2 hours of sleep the first night, 4 hours of sleep the next night, and it took me days to recover. I still haven't put out all my photos and videos, but it's so cool to be a part of this community and to be able to share it with everyone. It just makes it even more special. But yeah, I got to go with an employee. I talked to some of the people who bought the truck. I stuck around, got to meet Franz, got a selfie with him, and that was really cool. Joe Tegmeyer and I were the last two on the bus that was supposed to leave at 4. I don't think it left till like 4:45, and so it was really fun.
So the people you met who purchased, were they retail investors? Were they employees? I mean, I know.
No.
Go ahead.
Yeah, retail investors, and just first moment. And if you notice, there were two types of trucks, with the badge and without. So I picked that up right away, because I was right in the front and I was seeing all the trucks drive by. So we noticed the badge, yeah, they couldn't. Interestingly, she wanted to drive it back to California. And they wouldn't allow it. So I don't know if that was a Texas delivery thing. I'm wondering about that. But I have to thank Sat for bringing me. He literally made the best birthday present I've ever gotten in my entire life. And he just posted an awesome picture. It's SA_futurist. If you don't follow Sat, please do. He caught Elon back in the 2013 days, and he invested very, very early. So good follow, and we have him on the show as well.
Yeah, great. Glad you had such a good time. It was the birthday of a lifetime, right? Because I remember the evening at midnight and the whole next day. It was beautiful.
Yeah. You guys sang to me in the pregame bar. That was talk about making me feel weird, but it was really, really nice.
But you're right. It is incredible to be recognized. Jeff and me had that discussion a couple of times. I mean, complete strangers at the airport, stop. Yeah, you Tesla boomer mama. And I'm like, no, but yes, but don't say it. I mean, it's beautiful. It really is. It really is.
Yeah,
it's amazing.
There was this gentleman who came up to me outside afterwards, and his mom was in a wheelchair, and her saying that he watches me, and like that kind of if there's anything that I've ever said that's helped someone, that to me is all the payment, and this is why I love it. So don't be shy. Come say hi.
All that thanks to Herbert. Well, brighter thanks to you.
Yes,
that's the other way around. Well, let's continue the conversation. We got a couple more topics here. So first of all, last show we talked about are we headed into a boom market? And I think most of us believe that we are already in a boom market. But Alexandra, you pulled up this wonderful slide. So share with us what this all means.
Yes, please. So this is actually from the daily newsletter of Nick Colas. We had him here, good discussion. He was defending Toyota and all that. It was really good discussion. I loved that one. And I subscribed to his daily newsletter. It's $50 a month. Usually the first month is free. Honestly, you should consider that. It's well worth its money. Every day, every morning, every afternoon, I read them. They're very good. So this is from last night. And the link is in that newsletter as well, because you can update this on a permanent basis. This is the State Street Institutional Investors Risk Appetite Index. And you can see in about the first half of this chart that there's this black line at 0, and that the investments into the risk appetite is high when you go into stocks, and more you go into small caps and more you go into riskier investments, higher will be the line. And then when it's below the line, it means you're de-risking. So you're moving from stocks to bonds or even to cash. So you see very clearly the pre-2022 period, so until the end of 2021, was above the black line. Then you see in 2022, everything below the line. Then you see end of 2022, there was a little hope, but that was then quickly crashed down to April 2023. Then you had another July high, where people went back into stock, but that actually crashed again to October. And the yellow point there is now. So why did I want to show that? Is because we're just back to zero. So when people tell you, oh my gosh, it's too late. No, it's not too late. We're by far not yet in anything euphoric. There's still a lot of money on the sidelines. There's still a lot of money managers that are either in cash or in bonds that will want to get back into stock. They may want to wait for the new year. But I thought this was a very interesting graph. And I said to Herbert, I think we should pull up this graph regularly to just see how it evolves, because I really like the way it's set up.
I love this graph so much, and you could see that Tesla stock seems to have matched, except for here, right? Tesla stock fell drastically down here.
There are
But
reasons for that. Yeah.
when we had the July 23 rise, Tesla almost hit 300 again. It kind of just was falling through with this, and then now we're back down. So
yeah, the market is part of the price. There is no doubt about it.
Yeah, it seems.
What do you think, Jeff? You're not.
I had a strong P&D report and really a guide out of that, something that says, and I don't think they'll release their guide, to be honest, until the earnings release. But if there's some sort of confidence kind of going forward in that report, that would be a good time, as Alexandra said, fund managers getting in new year and figuring out what their positions would be. That would be a great time for Tesla. So let's hope that happens.
Where are all four of us right now in the volume production and delivery for this year, at the end of the year? Are you still at 1.8? Are you above or below?
Yeah, I think it's going to be around 1.8. I mean, China can still surprise, has been strong the last 2 weeks. Europe is difficult because lots of the incentives are coming to an end. We don't have the Germany numbers yet. 1.8. I don't want to go higher than that at the moment.
Yeah, I think when you asked earlier in the year, Herbert, I think I had a bottom side range of like 1.7, 1.75 on the top end, obviously 2 million. But yeah, I think for something around 1.8, maybe slightly less, maybe just over. That's where I think that's where we're gonna fall in.
Yeah, I agree. I think they'll hit their target or maybe slightly under. I don't think there's going to be some kind of crazy upside surprise. But back to the economics thing. Is this correct, guys? Is it something like 70% that there's going to be rate adjustment March now, and then it went from like 1 or 2 adjustments to something like 5 or 6? What are your thoughts on this with the jobs data that we're getting now?
Yeah, I mean, I can't comment on the frequency. It just sounds so lavishly exaggerated compared to where we were a couple of weeks ago, right? But there seems to be a general understanding that we have at least 1% of, however spread, of cuts next year.
Yeah, the data points have been successively pointing towards the economy worsening. The JOLTS report, which is what the Fed uses to really assess the jobs picture, they use the monthly non-farm payroll number we'll get next or tomorrow, but they use JOLTS, and JOLTS is about a month in arrears, and it looks at job openings, it looks at movement, and the last 4 data points have been restated lower. So the Fed has literally been operating in kind of a world where they look at this data and this data has been restated lower. And the data point we got this week was, I think, 300,000-400,000 lower than what was predicted in terms of available job openings, which is really, this canary in the coal mine. It's really starting to add up. The other data point we got was pending home sales was the worst data point since the great financial crisis of 2008. So things are really and now you've got a CPI coming up where you've had energy under pressure now for probably the better part of 6 weeks. So when you put all those factors together, all those data points are driving the Fed funds futures, which are driving this real-time dot plot of where they believe rates either need to increase, stay the same, or cut. And that's what you're hearing about for March. So we'll see what the Fed says next week. I've often said that he's going to be overly hawkish until the day he announces a permanent pause or a cut, the first cut. But until that meeting, he's going to be quite hawkish. And in fact, the 100 basis points of rate hikes have been worked out of the system, since they spoke last, with all these, poor data points on the economy. So if anything, he could be overly hawkish. I hope he isn't. And if this is the meeting where he actually pivots and says, yeah, I think we are going to cut here pretty soon, then the market is literally going to, it's going to rip super high. I don't know if he's going to do that at this meeting, but when he does that, be received very well.
You just said overly hawkish. It should be the other way around, right?
No, he's going to be overly hawkish.
He's going to be overly hawkish.
He's going to, like I said, he has been overly hawkish until now. What happened is in the last time he spoke, I think he spoke at a conference a week or so ago, and then nobody believed him. They're like, he has to say what he's saying. Otherwise, if he sounds overly dovish, then all the rate hikes are going to get worked out of the system, and you're going to see the rates go below 4% pretty soon. Yeah. So they use that jawboning rhetoric to keep rates up, so they don't have to hike them themselves.
So so the words he says is different than what he actually does, but they need to cut rates. Otherwise, we're going to go to deflation. They're losing control. They've managed it. Don't let it loose. But at this point, this is looking good. It's looking good for us Tesla investors. Bad news is good news. It's weird, but that's the way it is.
Yeah, we're in that transition point now of bad news used to always be good for the market and equities. And now we're in this point of, bad news. Now the market's not sure what to do with it. But like Xander said, they've adjusted the Fed funds futures and pulled in. The first rate hikes used to be, reductions used to be like September to December of next year. Then they got pulled into the summer, and now they're getting pulled into March. There's even a small fraction, I think, that would say even December. January. Mm-hmm. Yeah, December, January.
Okay. Well, so far, a lot of good news coming in for Tesla. Final topic here. Let's talk about Dojo supercomputer. So this just came out this morning that Tesla's Dojo supercomputer project lead, Ganesh Venkataraman, has reportedly left the company. That's the words that they use. And Peter Bannon, who was previously at Apple, now running Tesla's, is now reportedly being the person in charge of this. This is Peter Bannon. I've got a small video just so you can see him talking.
I was hired in February of 2016. I asked Elon if he was willing to spend all the money it takes to do full custom system design. And he said, well, are we going to win? And I said, well, yeah, of course. So he said, I'm in. And so that got us started. We hired a bunch of people and started thinking about what a custom design chip for full autonomy would look like. We spent 18 months doing the design, and in August of 2017, we released the design for manufacturing. We got it back in December, it powered up, and it actually worked very, very well on the first try. We made a few changes and released a B0 Rev in April of 2018. In July of 2018, the chip was qualified, and we started full production of production quality parts. In December of 2018, we had the autonomous driving stack running on the new hardware, and we were able to start retrofitting employee cars and testing the hardware and software out in the.
Not going to play the whole thing, but you get it. He started the chip design, he implemented that, and it worked. But this is the chip guy. How do you guys interpret what happened with the Dojo supercomputer, him becoming the new project lead?
We need Christian.
Exactly. Christian had all the insights.
He knew it was going to happen.
And no, now he's not here.
He was Peter P. Bannon. He was in the factory. I mean, Alexandra and I were walking. I think I pointed him out at one point. He was at the launch last week. I mean, he's literally a living legend in terms of known in the tech industry for silicon design. So this isn't a down. This is you're literally putting a living legend in that position. Now he's got his other duties and responsibilities as well. So I hope they're continuing to build and fill out the team. I mean, we don't know any of the details of why the other gentleman is not here, other than, you know, the rumor is the next generation Dojo 2 wasn't going, at least from a performance perspective, to expectations. That's a rumor, unconfirmed. We may never know, by the way, how these, you know, the way these things work. Maybe at some point Elon will comment. But I like the clip you picked, Herbert, because it shows you that, you know, Pete Bannon, he works with a sense of urgency, he works, you know, with a sense of speed. And, you know, they've done a lot of great things with that Silicon team very, very quickly. And what people don't understand sometimes is that Tesla's, their inference computer in the car and what they're doing with Dojo, you know, they're doing the network side and the client side from a silicon design perspective and software perspective, like NVIDIA. They've replaced NVIDIA on the client side in the car. And with Dojo, they're working to replace NVIDIA on the network and the training side. And that's this team doing that. So they're worth their weight in gold. He's worth his weight in gold. And, you know, hopefully, you know, we'll get some more updates on Tesla's AI effort and where they're at with Dojo, you know, from them soon. That's where we'll really know where things are at.
Exactly. I agree with you. I think this news today makes me really hungry for AI Day 3. And remember in that September study in my Bible from Adam Jonas, he was teasing that he knew in Q1 we would have an AI Day 3. And I do believe that is the case, because that report was written with the chip specialist from Morgan Stanley, and he is one of the most reputable and best analysts out there for the whole chip sector. And he had, I mean, multiple pages of that 66 page report were on the chip and on all technicalities. Not that I would understand much of it, but I read it anyway. And so I do believe they have deep knowledge at Morgan Stanley where we are with Dojo, because that report was really, you know, much deeper and much better than anything that has been coming out since. So I do believe we'll have an AI Day in the next 3-4 months, and we'll hear more from him. And I'm all hungry for it, because the little I saw from him, he just seems like, you know, in charge, knowledgeable, charming, everything we need.
Yeah. So yesterday we had what Google Gemini announced, and today there's, you know, stock performed by 5.34%. So I think it's an interesting announcement, and that's precisely the thing that I'm waiting for, is for Tesla to get credit for being an AI company. You know, you still hear most of the conversations about cars, and I know that's what is the top line number, but once they start getting some credit, and especially if they start using their own chips, and we stop hearing about the H100s, but we start hearing about you know, Tesla using their own stuff, I think that will really be that pivotal moment for the stock.
Agree.
Yeah, I mean, I think a lot of the narrative that some people, I guess, are saying when they heard this news is that must mean that Dojo is failing, it's not performing as well. That's why they had to fire this guy and then bring in Pat, you know, raise up Pat Peter. The way I think of it is probably knowing Elon and just seeing what's happening with the world. Thank you for mentioning that Gemini was launched yesterday. Elon has big goals, and he knows how fast you need to get to that big goal. And so it's not that Dojo is failing. It's more like he needs Dojo to achieve something beyond what anybody's ever achieved.
And quick.
And if you hear your guy tell you, "Well, I don't know if I can do that," you're gone.
Yeah, that brings me to one of the videos I really like about the Cybertruck, which was the one from the English guys, Top Gear, where they interviewed Lars and Franz. And Lars talked about sweating bullets, and Elon giving them initially 180 days to come up with a concept. And when he realized they were talking, he was like, "That's it, 90 days now." I mean, I just love it. And he liked that tweet from me, because I was saying he may be a part-time CEO, give me everything you want, but he's a full-time ass kicker, and that's what he is. And sorry about your revenues, but But that's what it is. And I mean, Dojo may have just been, they may have been talking too much, and then that was that. I mean, I really do believe Elon, for these decisions, when he feels people are not on the job 150% anymore, well, that's it. Go next one. And as a shareholder, I can only applaud.
Well, let's hope all four of us are right. That it
We
is.
are
speculating.
This is
We're
episode
speculating.
69. Herbert, you have to say this. This is episode 69.
69. So it's a special, fun episode. Anyways, okay. Well, thank you guys very much. Alexandra, you have done amazing work, and you just spent so much time for us Tesla investors. You educate us all the time. And this was one that I was interested in to know more, is like, who are the institutional fund managers? And you deliver with pictures. I love it whenever you do that. So thank you for doing that.
Perfect.
Thanks,
No
everybody.
problem.
Please follow the folks here. Alexander Mertz, Tesla Boomer Mama. You've got Jeff Lutz at the Jeff Lutz on X, and you've got R6 Alex, Xander Sky.
Meet real Xander.
Meet real Xander.
It's just the lights.
Thanks, everybody.
It's just the lights.
See you
Thank
later,
you.
Al.
Bye-bye. 6969.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.